Are you ready to unlock the potential of cryptocurrency? Welcome to Bitcoin Ben's Crypto Club, the premier destination for crypto enthusiasts and investors worldwide. Our mission? To demystify cryptocurrency and create a supportive community where you can learn, network, and grow. Imagine being part of a thriving crypto ecosystem in various cities around the world. In our first year, we're establishing physical hubs in key cities and launching an informative website. You'll have access to exclusive events, expert-led sessions, and a wealth of resources at your fingertips. Year 2 brings expanded educational programs and a mentorship system to pair crypto newbies with seasoned investors. We're not just a club, we're a movement. Our annual crypto conference will put us on the map as a global crypto capital. By year 3, we'll have our own app, a community investment fund, and a thriving ecosystem of crypto opportunities. Imagine being part of a group that's shaping the future of finance. Join us for workshops, seminars, and networking events designed to boost your crypto knowledge and investment potential. From beginners to experts, there's a place for everyone in our vibrant community. Together, we'll navigate the exciting world of digital currencies and blockchain technology. Ready to take control of your financial future and be part of something revolutionary? Experience our exclusive resort in El Salvador, a paradise for crypto enthusiasts. Call or text 941-391-3882 to join our Owners Weekly Call and start your journey with Bitcoin Ben's Crypto Club today.
Good morning. The Bitcoin price is almost $98,000 this morning. But do you know how much does it cost to produce a single Bitcoin? Think about it. Every single Bitcoin in your wallet needed to be mined, not created by the government, not by some corporation, not by printing wads of money, but through an unstoppable global network of nodes and machines and computers and supply chains of energy, solving insanely complex mathematical problems, hashing them, and a network and a set of nodes guzzling power like never before. So get your coffee, do your 5 jumping jacks, and let's take a deep dive into what powers the Bitcoin ecosystem, the energy equation, the energy supply chain. That is what drives the network. And I have a wonderful guest today. So welcome to Bitcoin Thursdays with Dr. J. I'm Dr. J. And today I'm going to break down just the raw power, the economics, and the energy that is used for the world's hardest money. And nope, I'm not talking about gold bars either. So I have an amazing guest today, Dr. Gordon Baer. He's the CEO of Go Solar, who has massive energy projects and an industry expert on energy. Welcome to the show, Dr. Baer.
Hello, Dr. J. And just to be correct, I don't have the title. I'm Mr. Baer. So
I just keep calling him a professor because he's been educating me on the energy supply chain.
Thank you for entitling me. So yes, hello everyone. My name is Gordon Baer with Go Solar Energy, and we are doing agnostic solar development for large industries and heavy energy consumers.
Before we get into the solar energy, just to set the framework for our audience, just like gold is not the same as gold mining, but without that mining, you don't have the gold, right? It's the same is true for digital gold, which we call Bitcoin. We need massive amounts of mining to create these Bitcoins that you trade and buy and sell every day. And in fact, 45% of the total cost. Now, there are, of course, many different kinds of costs. There are Antminer costs for hardware, and there's energy costs, and there's cooling costs for all kinds of, heated, these systems are generating and consuming enormous amounts of power. So you need cooling systems. You have, pooling fees, mining fees, all kinds of detailed costs. and yet there is an ROI that comes out of for a miner. So, for example, let's say Bitcoin is $100,000. Does it make sense to mine it at $50,000? Is there a sufficient ROI, after we pay all the costs to do that? But the biggest chunk of that cost is energy. And effectively, this entire digital network that we are calling our new money, the new revolution, is powered by that energy. And that is why we want to focus on that energy equation in today's next hour worth of show with Gordon. So Gordon, clearly the rise of the digital network is creating enormous stresses and demands on the energy grids that we have. What is the broad consensus in the energy industry as to how this beast is going to be powered?
Yeah, that's a really good question. And one of the points is that we have, or we are consuming, everybody is consuming energy. That's where we are really in a predicament where how to power this and how utilities or other power producers can provide sufficient power for this kind of a demand. And to take a deeper look into it, what is the grid capable today to produce, and what we are doing since decades. I myself, since the early 90s, in the heavy energy and commodity supply industry for large energy consumers. And with a polytechnical background, you look into a deeper dive how to produce energy and how can it be supplied to large off-takers or heavy energy consumers, so that this will be a streamline without interruption to a constant power consumers such as data centers or Bitcoin miners. And that's where we took a deeper look into.
Yeah, and that's really the energy supply chain. So it's really not just about the consumption of energy, but it's really looking at the entire energy supply chain and how it'll power. So just to dial it back, for example, did you know that to create one Bitcoin, on average, it takes 6.4 megawatts? I mean, put that in perspective, folks. That's an average American house powered for 6 to 7 years. That's the amount of energy a single Bitcoin requires to be mined. So clearly you can start to understand the significance and importance of what Gordon is talking about. And not all energy is the same. So you could generate $5,000 of per Bitcoin energy, or you could have 100,000 costs depending on the source, the kind of energy. So Gordon, tell us a little bit about, what are some of the different sources of energy that you're looking at? Why does it make sense to have one over the other? Long-term sustainability. Are we, this energy consumption is a feature. It's not a bug of the Bitcoin network. That's what gives it the security. That's what gives it the cryptographic logic, right? So we're going to continue to consume it. So tell us, what are some of the sources that you're starting to see emerge as the front runners?
And just to point one thing out, we are an agnostic and vertically integrating energy development firm, where we really take a deeper look in what energy sources are available, and not only what is available, also what is the cheapest form of energy available today in various locations in the world. So of course you can go with one of the oldest and very powerful source like hydropower, which is definitely one of ways to generate power. But what else is available either way on the grid or even as a gridless source? And that's where we took a deeper look into how can we integrate, for example, cheap enough power as of today, like solar power or wind power or any other form of energy, to make it feasible for a Bitcoin mining operation, whether it's small or large.
And when you say feasible, you're looking at number of different factors: economic feasibility, physical feasibility, and so on and so forth. Isn't that right?
Correct. So what we really did here in this regard is we looked into where is it able to be built? Where can you without having restrictions? Some form of energy like hydro need to have specific locations. Other forms like wind need to have additional locations where you have definitely sufficient space and sufficient wind capacity to generate this kind of a power. Or looking into a third power source like solar, what can you do anywhere in the world with solar power that is, of course, intermittent, but how do you make it usable for any kind of operation, whether it's a data center or a Bitcoin miner or any other use case? So, and that's where we took the deeper dive in and broke it down into categories where it's buildable best, how and how much are the costs for building this out, what kind of a permitting restrictions you might have. And this is exactly where you can break it down into several categories and which power source makes you the most independent and the most predictable.
Yeah, I think, and President Trump, gets this. He understands that the power of a country is based on how low cost the energy production can be. It's really as simple as that. You saw in the 80s and 90s, you saw the growth of the Middle East, cities like Dubai being built out of literally from nothing because of the the energy that came from fuels. And now there is this whole new revolution around new forms of energy. In fact, I mean, people are looking at energies from volcanoes. They're looking at flares and using energy that has also been lost. So clearly, there are multiple sources of energy. But the key point here, Gordon, that I'd like to get your thoughts on is it's not just the production of energy, which we're going to delve more into, but we have to think about criteria like storage. We got to think about criteria like reliability. We got to think about criteria like peaks and valleys in a dynamic power production and consumption cycle. So share a little bit about some of those factors that will impact Bitcoin mining.
Absolutely. And you're totally right. There are numerous other sources of power, such as geothermal power, for example, which is a great source and really a long-term and reliable source. But you cannot build this anywhere in the world because you don't have everywhere the access to certain geothermal structures or energy sources to build this out. If you can, that's great for you, and you definitely can achieve a low cost of energy, but it also requires a massive amount of upfront cost. So doing these kind of researches and analysis and coming into the power storage sector, it really plays a vital role if you're using any kind of intermittent power sources such as wind or solar, to integrate this for a constant power outflow, which mostly is required for a certain Bitcoin mining operation or a larger data center.
So there is this term in the industry called levelized cost of electricity, LCOE. Would you please explain that to our audience, what that means, and how does this compare, for the different power grids versus, we'll start talking with behind the meter in just a moment. But if you could share with our audience what the levelized cost of electricity is.
Yes. And that is basically the factor, not only what you are paying or what you would pay for your kilowatt hour, it also factors in your additional site cost and your additional interconnection cost, your build out cost of any kind of infrastructure. And once you take this as a complete consideration, what are your energy costs from the grid, your surplus power demand charges, for example, or your transmission fees. And also, before you even can get power from the grid, you have to factor in your entire build out cost to connect to the AC grid power connection.
So clearly, tremendous amount of complexity, transmission, connection costs, and all of these different aspects. So let's simplify this down to give us a sense of how much per kilowatt hour does a typical grid connected interconnect require for a Bitcoin mining company, and then let's start talking about ideas of the privatization of power, because the fundamental, think about the problem. We have a decentralized currency, right? We love Bitcoin. We love cryptocurrencies because it's decentralized. And yet, the underlying infrastructure on which it runs is in fact centralized. If you look at the power today, if I control the power, if one country controls the power, it controls a centralized structure through which I can shut that off and your entire Bitcoin network will come crashing down because I control the power. So you can have a decentralized structure all you want with all the benefits of a Bitcoin network. But unless you get decentralized power, it's not truly a decentralized currency. So talk to us, Gordon, about what you call behind the meter, the new wave of power generation, privatization of power.
Yes, and probably, as you know, anywhere in the US or anywhere in the world, if you're connected to the grid, you have essentially a certain cost that comes with your connection or your service provider for the power who charges you a monthly bill. And you really have to take a deeper look into the electric bill, where it's broken down and mostly it shows at the first glance your energy cost. And that is the kilowatt hour or the megawatt hour that you're consuming. And that might seem very low, and maybe it shows on some locations around 3 cents for your energy. But then you also have to factor in all the additional costs that a power provider is charging you. And once you factor all these in, you really have to break it down. What was your kilowatt or megawatt hour consumption per month or per year, and divide this by the full cost you have paid in the dollar amount or any other currency. So taking this in all consideration, in the US, the average energy price is around about 10 to 12 cents, depends on where you are. Of course, East and West Coast are kind of higher in their grid connections, but these are the all-in factored cost, and you have to really take a deeper look. What can you achieve, or which is your real price of energy, and is it feasible for your Bitcoin operation? And are there other ways to generate power that might be even cheaper than connecting to the grid and being dependent on a energy provider? So with that kind of a mindset, we broke it down back in 2022, running a calculation of multiple power sources and break them down for the cost of levelized cost of energy when you would produce it on your own. And I'm calling it either a gridless production or as a system integration into a microgrid as a behind the meter power producer and power consumer that will benefit from an additional factor that is the battery buffering system that levels out the intermittent production for solar and from wind.
So this, folks, off the grid has a whole new meaning in this context. So when you're living off the grid and you can actually generate your own power behind the meter. So when when you go to your house, you got electric meter, right? And from the municipal or the local power electric source, it's metering the power into your house. The new world that we are moving towards is where the energy is going to be co-located with the Bitcoin mining or the AI warehousing facility. The energy that is being generated by solar, by hydrogen, by wind farms, is not even going out to the public grid. It's private power. It's being transferred through power purchase agreements directly between the power producer, which is a private company, and a Bitcoin miner, who is a private company, and is behind the meter. So the energy is going directly from one side to another, and an interchange between two private individuals. Do you recognize the word peer-to-peer? And that's been happening in Bitcoin. When I could take a tenth of a Bitcoin from my wallet and send it to your wallet directly without the government, without a third party, without anybody else, that was the dream of Bitcoin. What we are starting to see, ladies and gentlemen, is that that same idea is starting to take shape and take form behind the meter in the actual mining of Bitcoin itself. So Gordon, when we transfer power from a private company such as yours to a co-located Bitcoin miner, what are some of the advantages that Bitcoin miner has, other than the fact that he's going to get it a whole lot cheaper, because it doesn't have all the tariffs, it doesn't have all the dynamic pricing, it doesn't have pricing like load, during load hours. Every one of you has faced that, right? If I'm using more power during certain hours, I'm charged at a higher rate. Look at your electric bill, you'll see it. In a power purchase agreement, those things don't exist in a private agreement. So what are all the benefits that a miner would have if they co-located with, for example, your facility that you have in Iowa, that you have in Arizona, multiple thousands of megawatts being generated? So tell us a little about the advantage to a miner.
Yeah, first, I would call it, we have a concept that is called power to B, like power to Bitcoin. And making this power accessible for Bitcoin miners or large data centers is a total game changer than only to be connected to the grid. And last year, I met up with a gentleman named Eric Hersman, and he is running an operation that's called Gridless Power, where he did concept what we are doing with smaller hydro generation facilities, where he has even the capability in rural areas to sell energy to local village owners or village inhabitants, and where there is no grid. So imagine you take the same kind of a concept here and co-locate this within the US, where you have a grid, but on the other end, you have certain additional cost with that, and you can disconnect your liability from the grid, but being still capable to operate and produce sufficient power, because the cost of generating facilities like solar and wind have come dramatically down. Additionally, battery costs have been reduced massively too. And our concept was, how can you build an independent power source for the lowest levelized cost of energy and make it accessible for co-locating industries? They are mobile enough to move there and take advantage of it. And there are two capabilities to take advantage of it. One is, as you mentioned, the peer-to-peer capability to connect on site with our power generating facilities. On the other end, you also could become, under our development structure, a owner of your own generating facility, and we are providing all the system layout, direct connection, and you run your own power source for your independent Bitcoin mining operation.
Amazing. So there are a couple of different models we're going to do a deep dive into. We're going to cut for ads right now, just a message from our sponsors. We'll be right back, and we're going to get into a use case of a Bitcoin mining operation with Antminers. So we'll be right back.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing CALIX Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At CALIX Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calixsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. CALIX Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calixsolutions.io.
Welcome back to the show, and here we're talking with Gordon Bear, CEO of Go Solar Energy. And we're going to look at a case study, Gordon, and I'm going to start with a little bit of background on the hardware. So most of the miners use Antminers, and we're going to use some generic hardware numbers. So, for example, a S21 Antminer actually uses about 200 terahashes per second. That's the speed at which it's hashing. That's the speed at which it is solving these complex problems to verify the transactions, to verify the blocks on the blockchain, and getting the rewards, right? So a typical $5,000 Antminer is going to generate about 0.1 Bitcoin per year. And the average lifespan of this hardware is about 5 years. So you're looking at half a Bitcoin is what roughly the 200 terahash machine is going to generate over the course of its life. So you can imagine these miners are actually putting enormous warehouses full of these Antminers stacked one on top of the other with massive cooling systems, immersion cooling systems, air cooling systems. All of this costs money. Just to give you, again, a sense of what it costs. So let's assume the price of Bitcoin is $100,000. And let's assume, and I'm going to tell you, let's say the cost is $50,000. The ROI is the difference. It's 50% ROI, right? In this particular case, almost 30,000 of that is actually the electric power at 10 cents per kilowatt hour. Now imagine if you can cut that down to 4 cents or 3.8 cents or 2 cents per kilowatt hour, what a difference it would make to the actual ROI of the Bitcoin miners, right? The hardware costs, the cooling costs, the lease costs, the mining pool costs, the network and security costs, and miscellaneous costs all add up to that $50,000. So if you're thinking of becoming a miner, those are the ballpark numbers. If you're really good at what you do, you might be able to manage your cost to $50,000 per Bitcoin on a $100,000 Bitcoin price, right? So there are some significant advantages if you're able to tweak the pricing down in places like Iowa, in places like Texas, where the land is cheaper, especially northern frontiers, you have cooler climates. So your cooling costs actually go down. And at the same time, you're able to lease for cheaper. And then, of course, you can get cheaper power. And why do you get that cheaper power, Gordon? Why is it that in Iowa, for example, you can produce a 20 megawatt power purchase agreement at 4 cents per kilowatt hour, whereas in any other place it would be 8 to 11 cents.
Yeah, and that's exactly right. If you're looking into the available resources, and one of the resources is, for example, the solar power, and as well, the other source is wind power. If you combine both of these power sources together and you make them accessible through a battery storage system so that you can level out the intermittent power production to a constant power flow, then you come to a certain price, because both of these energy forms are relatively easy to build, depends on the location, and they provide a very significant lower price of energy than you might have with any other form. On the other end, if you're breaking it down to just a simple form of a direct connected solar system with a battery storage as a buffer, then you can break it down, and you will come just by the system cost itself, and you, over a period of 10 years, you will come down to round about 3 cents per kilowatt hour, or $30 per megawatt hour, which is already far cheaper than you can achieve from the grid. And that has no additional cost to it. And the sun is not giving you a bill for any kind of additional fuel that you have to pay for, or transmission that you have to pay for. So
Okay, let me ask you a question here. So if you're using the renewable sources of power, clearly solar, wind, you know, once that infrastructure cost goes into play, you're now looking at effectively free energy. At least, you know, there's a conversion, there's an efficiency. So how many of these solar cells, how many acres of it do you need to put to generate enough power for a 20 megawatt facility, for example?
Well, if you're breaking it down to, for example, a direct power consumption, and I would call it roughly 3 megawatt of end miners, maybe this is like 2 containers of end miners, then you will need a power source that is capable to produce sufficient power 24/7 to operate your mining facility. And just to break it down in simple numbers, to generate that much power, you have to have a power source that creates per year at least 25,000 megawatt hours annually, so that you can run your facility. And how can you achieve it? As long as you are in the US, below the latitude 42, then you have the capability to build out a 20 megawatt solar farm, which a 15 megawatt solar farm, a 15 megawatt solar farm on the highest density that is capable as of today, on just 20 acres. So if you have 2 containers and 20 acres of land, you can become basically your independent power source just with that small plot of land, to run at least 2 end miner containers with a power consumption of 3 megawatt.
Great, but that assumes that the sun shines 24 hours of the day. So if you're going to be building a 20-acre farm with 2 Antmine containers, you need battery storage of some sort, correct?
Absolutely correct. I mean,
And
that is essential, and this has additional cost which factor in. But you also, if you are not really saying, I want to take a look into a 24/7 operation, I am just looking into the lowest cost of energy, and I'm only mining when the sun is shining, then you will come down even farther with the cost. But nevertheless, we have a really good factor here that needs to be considered, and these are, in the US, the production tax credits, which are for any renewable energy source under the tax code from the IRS, as well as production tax credits for the battery. And every kilowatt hour and every megawatt hour you're producing and consuming through these infrastructures or your own power source is eligible for a tax credit that you can trade or obtain for yourself for tax deductions.
So great point on the tax credit. We'll come back to that in just a second. Uh, the architecture, I think the architecture that would be most suitable is no different from farming. So, you have co-ops, you have farmers who are able to pool some of their resources. So while there would be some individuals or companies that would say, we want to own our own power generation, most of them would want to co-locate with a large power facility which has produced and got the energy storage facilities already in place, and they're simply drawing power as a consortium from that major energy source. So let me give you a little more sense of the battery, because that battery fascinates me, because I think the next 30 years is about battery capacity and battery storage in a distributed environment. If you think about batteries, they are lithium batteries, they're cobalt, nickel, cadmium. There are rare earth elements that are required to power those magnets that drive the large propellers on wind farms. So there's a lot of metals and technology that goes into actually the production of these batteries, cathodes and anodes that are being generated. So, Tesla is producing what are called very large scale storage capacities, right? These are almost terawatts of energy that can be stored in these batteries. And these batteries are not just powering like a little UPC you have under your desk for a few minutes or a few hours. You can actually power a mine, a Bitcoin mine, for weeks on end with the kind of storage that is here. Which is why, if you want to achieve the very high exahashes, you want to get to the 10s and 20s and become a meaningful miner, you absolutely want to look at a storage facility that is built in to your power agreement so that you can do this. Because back to the equation of supply chain of energy, a lot of these minerals, a lot of the lithium, a lot of the copper, a lot of the nickel that you make these batteries with, you make the electric cars with, these are in South America, these are in Australia. So it really opens up a very global trade and opportunity where these minerals can be refined in the United States, power grids can be created, and these batteries, once produced, will get distributed all over the country, creating a distributed architecture of power. And that is something which is really special. So, Gordon, tell us a little bit about the economies and efficiencies of having this kind of a large scale battery available to your miners in, let's say, a miner consortium that you got 2,000 or 20,000 acres of land, and you start to put different miners in that, sucking power from a large centralized plant which can produce 2,000 megawatts, 2 gigawatts of power or more. And it also has this battery capacity. So what are the advantages of that?
Yeah, and thank you for really explaining and going in some details here of battery technology. We looked at a little bit deeper, not only in lithium ion and rare earths consuming battery technologies. We went into alternative batteries, which are more suitable for a constant power distribution, because specifically when it comes to grid support with lithium ion batteries, which are great for milliseconds to kick in and stabilize the grid. That is a use that is mostly for utilities really important, which has its own sector. On our end, what we really want to provide here is a constant power flow to Bitcoin miners or data centers. They don't have this kind of a peak fluctuation where you have to kick in every so and so many milliseconds or for only a short period of time. What we want to accomplish with our battery storage here is a long-term buffering of energy. And there are other technologies like metal hydrogen batteries that are very suitable for this kind of buffering of intermittent power and giving out a constant power flow. There are other batteries like molten salt batteries that will increase the capacity factor even higher, where you can store a lot of megawatt hours, gigawatt hours, or even terawatt hours, very cheap, with very cheap materials that are abundant, available, and where you don't have to harvest rare earth metals. And the next thing is there are also long-term use cases shown for redox flow batteries that has been in use for almost 2 decades right now, and they showed tremendous success on island power generations. There's a island in Germany that has been powered by Gildemeister redox flow batteries for more than 15 years right now, which is phenomenal because you don't have this kind of degradation which you usually find in lithium ion batteries or other kind of rare earths using materials. And specifically when it comes to one of the battery supplier that we have identified, which is Venue with their metal hydrogen battery, they have a life cycle over more than 30 years with hardly any degradation. And they are really a technology that has been used by NASA and is approved since decades. And they make it now available for us in the industry to really scale up large amounts of energy storage capacity, making it usable for constant power consumers.
That is absolutely fascinating because as the nation starts to build the strategic Bitcoin reserves, Bitcoin exposure being taken by federal governments, by state governments, the idea of being able to have stable energy supplies is so critical to actually having a digital economy. And it should, by now, I hope people who are listening to this show, it's becoming crystal clear to you that Bitcoin is not just a digital currency. It is purely a monetized form of energy. It's really important you get this, that it is driven, the value of Bitcoin comes from converting energy into a set of digital cryptographic ciphers, hashing them, solving them, putting them in blocks, chopping them up, making them into Satoshis, and sending them to your wallet. All of this is happening 24/7 around the globe through thousands and thousands of nodes, millions of nodes, drawing power and sucking energy from 18 different ways of creating energy, 20 different ways of storing that energy, 30 different ways of transmitting that energy. And at the end of the day, trying to figure out how do we get that cost per Bitcoin down so that mining can stay efficient. This continual hunger for mining in a more efficient manner. There, you got these chips from NVIDIA, which are the H100s, the GPU chips that are used, the H200s. We're going to talk about a little bit more about the chips and about cooling after we come back. A quick break for our sponsors, and we'll start in the last segment of our conversation. We'll be right back with you.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing CALIX Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support, You're never alone in your journey to digital empowerment. At CALIX Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calixsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. CALIX Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calixsolutions.io.
Welcome back, and thank you for being with us. Gordon, as we start to wrap up this conversation, it's been an amazing deep dive into the energy supply chain. Give us, you have two major projects. This is your time to put a plug in for that. You are producing energy in Iowa, in Arizona, and the cost equation is off the charts. Some of the cheapest energy in the United States is being produced in those areas because you have cheaper land, you have abundant sunshine, you have the energy supplies over there, cooler weather for lower cooling costs. So give us some of the summary, high level aspects of why Bitcoin miners should go towards Iowa and your facilities there.
Yeah, and thank you so much. And actually, we have even 3 large locations in Arizona, Iowa, and Missouri, which are all very suitable for bringing Bitcoin miners onto those sites, based on numerous factors that you look in. Number one is in Iowa is a lot of wind available, as well as we choose the most sunniest part of Iowa. So way south, where we are around the latitude 42. And there's a kind of a microclimate where we can even harvest a lot of sun during the winter time, and having still a lot of wind power as integration for the on-site power storage. So that makes it very suitable. On the other end, there's a lot of infrastructure on these sites, specifically when it comes to natural gas pipeline connection, which is another form of energy that is very suitable and possible to run additional power sources, whether it's through a specific version of power conversion out of the natural gas by the pressure reduction power generation, as well as the usage of a natural gas turbine for an initial business case. But also it is a backup power source in any case there is any system outage or there's not sufficient wind nor sun available, so that we have additional backup. And the next thing is also we have a ammonia pipeline on the property that enables us to access another power generation fuel in case of any backup power is needed, specifically when it comes to large hyperscale data centers. And with all these power sources on these locations, it makes it very viable and reliable to have a connection onto our behind-the-meter microgrid system. Additionally, our locations bring another advantage, that is a cooler climate, as you mentioned. And also we have water resources on the property for hydro-to-hydro cooling, which can reduce the cooling cost additionally by a significant factor of around about 20% and more. Depends on how you want to cool your miner or data center. And when it comes to the location in Arizona, even this location there has a unique and specific feature, because it's so high elevated that we have not the hottest temperatures like what you usually encounter in Arizona. And that makes it already very accessible or suitable for data centers and Bitcoin miners. And additionally, we sit on an aquifer with additional water resources, even in these drier areas. So with all this combined, there's a lot of infrastructure on site, including fiber optic, which makes it very convenient to tie in together the data centers with our power generation and energy buffering on site.
Thank you so much, Gordon. It has been a pleasure speaking with you and for you to share so many of these aspects of the Bitcoin ecosystem that many of our viewers are listening for the first time, hearing how all the parts and pieces connect. We're used to layer 1 and layer 2 and layer 3 architectures. What we are going to start delving into more is what powers the very existence of these. So thank you for being here today. We'll hopefully have you back again at some point to discuss updates in the energy industry.
You're welcome, and we are really happy to make anybody independent from the power sources.
So folks, decentralized Bitcoin networks require decentralized power. And that is really important to understand. If we want that trustless, permissionless monetary ecosystem, that financial system that works, it has to be trustless power systems as well that powers the Bitcoin infrastructure. So the real question is not whether Bitcoin can survive the energy demands. The real question is going to be, can the energy industry keep up with the relentless needs of this power-hungry industry? Thank you for being here today. Keep stacking those Bitcoins, keep questioning everything, and keep that power on. God bless you, and God bless America.
Yes, be blessed. Thank you for having me.
Thank you. Perfect. Thank you. Of course. You play the extra?
It's great.
All right.
Hey, morning.
How are you?
Good. How are you?
Great. What's happening?
Look at your cup.
Oh, yeah.
How you been?
Good. How about you?
Good. Just
Yeah, every time
Awesome,
I come in here,
Gordon.
you're always busy talking to everybody. And,
that was great.
Yeah.
That was great.
So, how you doing? Oh,
You know, this is
location and location.
Welcome to the future of luxury travel, where cryptocurrency meets paradise. Introducing Bitcoin, Ben all-inclusive beach resort, nestled on the pristine shores of El Salvador. Every room is a gateway to adventure, complete with your personal 4x4 vehicle, scooter, and jet ski. Picture yourself cruising along scenic coastal roads, feeling the thrill of freedom. Glide across crystal clear waters on your private jet ski, embracing the rush of adrenaline. Return to your luxurious suite where comfort meets cutting-edge technology. Indulge in world-class amenities from gourmet dining to rejuvenating spa treatments. Experience the vibrant nightlife with entertainment options that cater to the most discerning tastes. Invest in a resort that's not just keeping up with the times, but defining the future of travel. Join us in creating the ultimate paradise. Contact us at 562-526-0813 and become part of the future of luxury travel.